You know what time it is. Shout out to everybody in the YouTube universe. Hope you guys are doing well. It's Powell Day, ladies and gentlemen. And we're pulling back after scratching fresh new highs again. The Bulls have been on a tear, guys. Shout out to everybody in the YouTube universe. Hope you guys are doing well. Happy Wednesday. Happy Powell Day. Welcome back to another episode of the Infinity Show. Hope you guys are doing well. Sit down. Whoa. All right. Man, these Bulls have been ripping, man. Non-stop, guys. It's been crazy. It has been crazy. All right, man. Hope you guys are doing well. We got Microsoft earnings. We got Google earnings. We got Zuckerberg earnings. We got NVIDIA cracking 5 trillion for the first time. Insane. We'll see what Powell does for us. It's gonna be interesting, to say the least. I was looking at the pivot points for NQ, bro. Daily EMAs are like down at 25,600, something like that. Something crazy. Let me see. Hold on. Man, interesting. All right, let me get this link real quick. Let's see if this is too. All right, we're good. All right. Let me get this link real quick. Hope everyone's doing well. Just played eval combines again today. I'm trying to load up the fundeds, and then we can start the cycle I was doing last year. Getting one here, one there. It's not. I don't know. It's not working. It is not working. All right, let me see. Are we good? All right. Welcome. And shout out to everybody in the YouTube universe. Let's go. Free chat and Kamal Dorsey, what's going on, man? Hope all is well, man. Happy Wednesday. Happy Powell Day. Powell will be on the mic in 2 hours, man. Any trades today? I just played combines today, man. I'm trying to build these funded accounts up. I'm trying to get these funded accounts up, man. All right. Oh, that'll be a good one. Where does Powell take us? This thing on? Um, let's see where he takes us, man. Should I do flat or? Let's just go with that. And where will Jerome take us? Let's see. Do it like this. Shout out to everybody in the YouTube universe. Hope you guys are doing well. All right, setting up this poll. Set up. All right. We're Gucci. We're Gucci. Let's go good. We're gonna figure this out. Shout out to everybody in the YouTube universe. Yeah, we're getting a little bit of pullback action. Speaking of that, I could looks like some whoa, hold on. Let me draw this trend line. We got some trend line action from the highs. We got some trend line action. Shout out to everybody in the YouTube universe, man. We are in the building. Let's see if we can put it like straight from the tippy top. It's like right on it. Didn't we have like a mini trend? Boom, 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 boom. That's another trend. Previous all-time high. The trend is your friend. Let me see. This is another one, right? Wow, that's like exactly where we collapsed to. Right below, right? Man. The algos are definitely trading these trend lines, man. Tried, collapse, and used it as resistance. plus some gap action. Now we're back to another one. Man, yeah, you got to keep your trend lines on the chart. You got to extend them because old trend lines are like still holding strong. It's crazy. Let me see if I can get this thing going. Shout out to K the Noob in the building. Come outdoors, he said, happy Wednesday. Yeah, I got some on gold, but did a stupid lockout. I wanted to trade more. Ooh, I've done that before. I'm like, golly, I was up like 50 bucks. I was up like 50 bucks, man. And I locked myself. I was like, oh, I did not mean to do that. I'm trying to train myself to be disciplined and so I don't have to lock myself out. I'm trying, man. Got that Topstep X account. Nice. I got to change my lockout, but have to wait now. Yeah. I've done that before. I don't know if I was trying to press like 1 hour and pressed 1 day instead. I don't know what I was thinking. I've done that before. Shout out to everybody in the chat. All right, man. Let's see where these bears take us. We got trend line action, man. We got another trend line down here too. So that's going to be interesting. Got the 1 hour up. Very interesting. We got some gaps down here. We just pulled back to the middle of that. That was like 200. That's a key level. Let's see. Shout out to everybody in the chat. We got the poll up. Where does Jerome take us? Does Jerome take us to the upside or does Jerome take us to the downside? Shout out to Maxwell. Greetings. What's going on? Happy Wednesday. I'm trying to post this thing. This thing just posted. Oh, yeah, I think we're good. Pin message. Let's get another poll going on this side. Did I even look at this one? I don't know. Where will Jerome take us, guys? We don't know. We'll do the same over here. Where will Jerome take us? Up or down? Or pull back? Let me start that. All right, cool. Shout out to everybody in the YouTube universe. Shout out to Maxwell. Greetings. Come over to the horizontal stream. Shout out to Maxwell. Anyone who jumped in the Discord last night, say something. I know Chris Cleveland, but the other, I think we got like Prop Farmer, JD. You gotta say something. Say something in the Discord. NVIDIA, man. Shout out to everybody in the chat, man. Shout out to all the new subscribers. We tried to trade Asia yesterday. It simply wasn't the same. Oh, so Maxwell, go to the channel on YouTube, right? And you're gonna see two streams. So choose I think it's like the brown thumbnail. Is it the brown? No, the red thumbnail. Choose the red thumbnail and it'll bring you to the horizontal stream. So there's two streams running, so you can see better on the horizontal stream. I think on the short stream you can't zoom in. On the horizontal stream you can zoom in, you can do all that. You can zoom in on the short stream after it's been recorded. After it's been recorded, then you can do that. All right, let me see. So far, everybody's saying pullback. Yes. Shout out to Maxwell. You are here. This you can see a lot better. You can adjust the quality. If it's not clear for you, change the quality to 1080p. Go to the quality and change it to 1080p. Shout out to Maxwell. Shout out to Kamal Dorsey. K the Noob. All right, guys. Let me make sure. Right now we've been downtrending since the open 10 o'clock candle. It's just been down, 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 chop, chop, chop. Arrow maker. Control. 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 We'll see. We'll see if we can get some type of breakout off the 200 level. Back up. We'll see. I like the pintail on the 1 hour. Nice bounce. We dropped down to the middle of this 1 hour FEG right at like 204. And now bulls are trying to pick it back up. We'll see what they can do. Shout out to Maxwell. We are in the building, ladies and gentlemen. Where's Jerome gonna take us? Does he take us to the stratosphere or does he pull us back? Someone said the price cuts are already baked in, and it looks like it. The way we've been ripping the last couple of days have been insane. Insanity. Hope everyone's doing well, man. I think if I do how should I do it? Whoa, what is this? It's wild. Okay. That's good. Shout out to everybody in the YouTube universe. Hope you guys are doing well. Whoa. All right. Making sure the sound is correct. Let's see. I'll go to the channel, right? Shout out to everybody in the chat. Hope you guys are doing well. All right. All right, T. Shout out to everybody in the chat. Let's see if we can get this thing rocking and rolling. Shout out to all the new subscribers. Appreciate you guys, man. We're growing. We're almost to 1K, guys. We're almost there. We're almost there. All right. All right, let's see how this trend works itself out. Do we pop out of this level? I'm watching it. These were some key levels. This right here. That was the break. This was the retest. And now we're retesting it again. The trend is your friend. See if they can reach out of this level. 200 was a nice nice entry. 00 work. We popped above 300 a couple times, but bears are pressing down from those levels. But we did get up there. Heck of a push for the bulls. Heck of a push. Shout out to Maxwell. Maxwell said, until the bend at the end, you made it to the horizontal stream. This is better. Shout out to everybody in the chat. All right. Let's make sure this is good. Make sure this is good. Whoa. All right, we're kind of pushing through. Let's see if we can hold back up. How far do we go? Do they retest 300? We'll see. All right, I think we're good. We are good. Shout out to everyone in the chat. I hope you guys are doing well, man. Happy Wednesday. Powell is warming up. So I think price action is waiting for Powell to figure himself out. And we'll see what happens during FOMC, ladies and gentlemen. We got FOMC. We got Microsoft earnings. We got Google earnings. We have Zuckerberg earnings. We have NVIDIA passing 5 trillion for the first time. That's insane. Insane. NVIDIA has been ripping too, man. We dove into the 170s now, and we popped above 200. That's insane. Nice 20-point rip. If you got in at the money and got like some, I wanted to get some calls, but I think I missed the entry. 2027 calls. Just let the thing go. Let it rip. So yeah, today just combines, man. The one I was working on yesterday, I blew that one. And this one I just kind of pulled from the mud. Pulled it from the mud, man. So we'll see, man. I got two XFAs locked in, so I just gotta activate those. But I'm trying to like get to like 3, 4, or 5. Then I'll just activate all of them at the same time and cycle them. We'll see. We'll see how the week closes. I might start one before the end of the week. Today's Wednesday, right? Yeah. So we'll see. We will see. Shout out to everybody in the chat. How's everyone doing today? Are you guys green or red? At 300 level, man, they slapped down hard from there. Powell, man, is coming. Romy Rome is coming. Maxwell said, no trades for me since Monday. Nice. Sitting on your hands is a position. Yeah, I'll try to take my time, man. I might grab some more Apex evals too. Apex evals. All right, let's see. Should I just open this thing up? Let's see if I can. Excuse me. It's fully charged, right? Yeah. Shout out to everybody in the chat. Watching to see if we get continuation. Off of the 200 level. We got a nice bounce off the 200 level. Man, we gotta get I might get a new, I want that razor blade, man. We gotta get that razor blade. Gotta get that razor blade, the razor blade laptop. I want a custom build too, if we can get it. That would be cool. Have like 3 computers going at the same time. Let's go. Hope everyone's doing well, man. Shout out to Kamal Dorsey in the building. Shout out to Maxwell K the Noob. Let's see. Shout out to everybody in the chat. On the short stream, the vote is for continuation. Yo, if you're on the short stream, come over to the horizontal stream. There's two streams going on right now. You'll be able to see and like zoom in on the horizontal stream. I think it's like better quality too, I think. Shout out to everybody in the chat. We're getting a little bit of a break. Let's see if we can get to that second trend line up here, and we'll see what happens. Because that's another trend. The trend is your friend. Let's see if they can get above. That's the 1 hour, right? Yes, indeed. Shout out to all the new subscribers, man. Appreciate you guys, man. We are pushing toward 1K, man. Slowly but surely. Watching to see if we come back to retest the 30s. If we retest the 30s, I might take it back up. What's the open of this candle? 37. Where my 15s at? $37. Fresh 15-minute candle coming in hot. Let's see what happens. Let's see if they pull and go. Let's see. Let's low this 26. Oh, we're turning around at the 200. Let's see if they dive into this gap right here. If we get into the 30s, I'll use like 1 micro, let it run. Shout out to everybody in the chat. Hope you guys are doing well, man. Happy Wednesday. Jerome will be on the mic in 2 hours. It's going to be interesting. My bad. I was on mute. Shout out to Chris Cleveland in the building. What's going on? We are in the building. I was looking for like a pull into the 30s. And then if we get a pull into the 30s, we can like let a micro run. Let's see how far she goes. Shout out to Chris Cleveland in the building. Shout out to Maxwell. And shout out to Kay the Noob in the building, man. Hope you guys are doing well, man. Chris Cleveland, 200 is a good day, man. 200 is a good day. Just move the account forward. I've been up 200 and started over trading. And the 200 disappeared, man. So yeah, that's a good day. Yo, when you get a chance, in the Discord, let everybody know what you've been trading and what you trade and how long you've been trading. I'll ping you right now. Hold on. Just so they can get familiar with you. I just pinged you in the Discord. Right now we got a nice bounce off of 200. Watching to see if she wants to continue. I had another entry in the 30s, but we didn't quite get down there. Shout out to everybody in the chat. If you're new here, welcome to the Infinity Show. Hope you guys are doing well. Shout out to everybody in the chat. Shout out to Apex Clippers in the building. Shout out to Chris Cleveland. Chris Cleveland says, I have a feeling these guys have already pumped it high, factoring in the Fed rate. Yeah, we were just talking about it earlier. It looks like it's already been baked in. And it might slide big, who knows? Let's see. Yep. All depends on Mr. Powell. The power of Jerome. Mr. Jerome. Shout out to everyone in the chat, man. Shout out to Apex Clippers. Shout out to the Red Candles Nation. Shout out to Red Candles Nation, man. The Red Candles Nation has come over and showed love, man. All right, let's see if we test this upward trend line up here. We'll see if, not risking a lot here, just watching it. Let's see if it can pop. It's 15 minute. Nice push. Yeah, we've had a nice push off of the 200 level. Big wick on the 1 hour candle for sure. 1 hour candle definitely started red. We dove, and the bulls bought it right back up. Shout out to Chris Cleveland. Nah, not a mentor. I just met him on YouTube. He sent over his crew to over here to the Infinity to Infinity Land, and now I send my people over to him. He's brand new. He just started trading like a couple months ago. But he's a great streamer, great guy, great trader for a beginner, man. Like, he's doing good. So I'm just showing love back, man. He sent over a bunch of his subscribers, so I'm sending my subscribers over to him. Shout out to everybody in the chat. Yeah, he's a great streamer. He's brand new, but I'm definitely learning like how he streams. And I need it. He told me to get the giveaway, figure out the giveaway system. So I'm gonna try to get that going. Fourth quarter. We'll see what we can do. We're trying to get to 1K subscribers. After that, we might do it. Shout out to everybody in the chat. Shout out to all the new subscribers that popped in yesterday. Appreciate you guys, man. Shout out to Chris. It's Jay. Yeah, giveaway. I think that's what that's what it looked like. I didn't know people were fiending for giveaways like that. I was sitting there looking at Red Can. I'm like, what is happening? But everybody in the chat is like, yo, when's the giveaway? I'm like, wow. They're not playing about that giveaway. All right, we are approaching the trend line. Let's see what happens. Do we break through? We got a fresh 1 hour candle coming in hot 15 minutes from now. Shout out to Chris Cleveland in the building. Nice push, man. That 200, low 200s. Ooh. Ooh. Do they want to test 300 again? We are approaching the trend line, guys. They're not playing either. These bulls have just been, I don't know, man, relentless. Wow. That 200 entry was clean. We have gone 60 points, 70 points, and have not looked back. Nice pop. Trend line retest coming in hot right now. We'll see if she can push through. Can she push through? Whoa. We are gonna see. Shout out to Chris Cleveland. Shout out to Maxwell. Shout out to K the Noob in the building. Yo, if you're on the short stream, come over to the horizontal stream. You can see better and you can zoom in. You can change the quality, all that good stuff. If you haven't already done so, change the quality to 1080p, and you'll be able to see everything crystal clear. Crystal clear, man. Let's see. That's gonna be a good one. Yeah, that's a wrap. 4-3. How? Wow. 2-5, 3-5. 5-2-7-1. Yeah, it should be good. Should be a good one. Fun times. Today is Wednesday. Man, in my head, I'm like a day ahead, man. It's crazy. I keep thinking it's Thursday, Friday. All right. It's 2:13, right? Oh boy. 13. Yeah. Shout out to everybody in the chat. If you're new here, welcome to the Infinity Show, guys. It looks like we just checked in with the trend line. I don't know if we're going to curl back up and retest it again, or do we retreat back to 200? We'll see. Jerome Powell will be on the mic in 1 hour and 40 minutes. It's going down. The volatility should be fun. We'll see what happens. We got Microsoft earnings. We have Google earnings. We have Zuckerberg earnings, all at the bell. Shout out to Apex Clippers. Indeed, get your popcorn ready. Romy Rome will be on the mic. Romy Rome will be on the mic. Man. I did see that. Just need something decent. Jeez. Here we go. Oh wow. Oh yeah, he was like a sub. Okay. Shout out to everybody in the YouTube universe. Hope you guys are doing well, man. Oh, got it. Hold on. 1, 2, 3, 4, 5. What does that mean? Oh, got it. Okay. Shout out to everybody in the chat. If you're on the short stream, come over to the horizontal stream, ladies and gentlemen. Do we get continuation with Powell? Or does he take us to the into the abyss? We'll see. We will see. Let's see if they can break through this trend line. That 200 bounce was clean. Man, that was super clean. That should have been the entry. Or at least the bottom of that, the 5-minute, the 15-minute candle after the pullback. At least 220. 220 up still would have been a good move. Shout out to everybody in the chat. Let us know, how was your day so far? Any trades? If you're new here, say something. How long have you been trading? What do you trade? Shout out to everybody in the chat. If you're new here, say something. How long have you been trading? And what do you trade? Let us know if you're green or red on the day. I'm like 1 for 1. Blew one combine and then pulled another combine from the depths. From the depths of being blown. But we have like two combines already passed that are sitting on the sideline, but I just need to activate them. But I'm taking my time. I'm trying to get like 3 or 4 going, then I'll just 3 or 4 passed, and then I'll activate them all at the same time. I want to get my cycle strategy going again. Shout out to everybody in the chat. Hope you guys are doing well. We're rocking and rolling, ladies and gentlemen. Like, comment, subscribe, share, hit the notification bell so you know exactly when I go live. If you're new here, say something. How long have you been trading and what do you trade? Yo, Chris Cleveland. Oh yeah, you got it. Okay, cool. We're good. That was at 44. Oh yeah, speaking of that, I don't know if I did like the, I have to go back and look. Did I open this up? I did not. I don't think I did. Let me shrink it. Shout out to everybody in the Discord. Shout out to Mark M. Shout out to Chris Cleveland. Shout out to Vibes. Shout out to Sophie. Shout out to everybody in the Discord. Shout out to Elmi. Shout out to the Don. I haven't heard from the Don in a minute. Shout out to Adam Daz, all the way out in Egypt. Bulls look like they want to push toward 300. We'll see. What is the email? Are there any more phone calls I gotta make? Let's see. Oh. Hope everyone's doing well, man. Get your popcorn ready. Mr. Powell will be on the mic very soon. Mr. Powell will be on the mic very soon. Yeah, they're testing that. They want to test that trend line, man. What a push. Nice bounce off of 200. Very solid. Shout out to everybody in the chat. If it's your first time here, welcome to the Infinity Show. Hope you guys are doing well. Happy Wednesday, man. It's Powell Day. It's Powell Day. In an hour and a half, that man will be on the mic. Then to close the day, we have Microsoft earnings. We have Meta earnings. We have Google earnings. Coming in hot. Then we have GDP tomorrow. And we got PCE on Friday, man. Action packed. Action packed. I think if we do oh, I do that correctly. Shout out to Chris Cleveland. Chris Cleveland says, am stopping trading in 3 months. We'll get in after 3 or maybe later tonight. Okay. 3 minutes. Okay. Too risky to enter. Let the market decide a direction. Yeah. The thing is, everybody's waiting on Powell right now. So we'll see how Powell shakes things up. Do we push to the upside or do we push to the downside? It's gonna get volatile though. We could shoot 100 up. We could shoot 100 down. It depends. We'll see what happens once he hits the mic and says good afternoon. As soon as he says good afternoon, man, we drop 50 points, pop 100 points. Insane. Shout out to Chris Cleveland in the building. Shout out to all the new subscribers, man. Let's keep on going. We're pushing our way to 1,000, man. We're almost there. Slowly but surely. We're almost there. Let me run these things. Oh no, not that bright. Let's see. Boom. Shout out to everyone in the chat. Nvidia went crazy, man. above 200 right now, I think. Are they still up there? They might hold 200 now. You hold 200, the road to 300 begins. We got Meta, we got Microsoft, we got Google at the bell. We have Apple and Amazon. There's tomorrow after the close. Big earnings reports. Here we go, bulls. Here we go. Can they go? Watching to see if we go up there and try to sweep 300. We'll see. Shout out to everybody in the chat. Hope you guys are doing well. Happy Wednesday, guys. Whoa, get rid of that. They're grinding up right now. Now the countdown for Powell starts. We got an hour and a half. We'll see what happens. Trend line retest. Oh yeah, let me see. Is this supposed to rain today? Let's see. Shout out to everybody in the chat. Hope you guys are doing well, man. It's like on and off, I guess. And more tonight. Maybe even like Monday might be the day. Maybe like Saturday. All right, we'll see. Shout out to everybody in the chat. Can the Bulls get back to 300? We'll see. The last time we got above 300, we got smacked down. We'll see if Jerome can push us through. Rome. Shout out to everyone in the chat. I am sitting here trying to look for, what was I looking for? Yeah, at one point, I don't know. All right. We will see. It's just not raining right now. Let's see. The Bulls are holding the line, man. Nice bounce off of 200. Let's see if they can get up to the 300 level. Gotta break through this trend line first, though. If they can't break through here, it's a wrap. Mr. Powell is inbound. We have Microsoft earnings. We have Meta earnings. We have Google earnings. All at the bell. Plus FOMC. Insane. Shout out to Chris Cleveland in the building. We're back to this gap too. This 260 gap. Maxwell says that's a lot to process. It's part of the game, man. Earnings season plus big data drops. Just had CPI. What was CPI? CPI was last week. Feels like CPI was it's like back to back to back. Then you got China, US news. It's a lot. You just gotta go with the flow. I don't really pay too much attention to the news. I pay attention to price action. I want to see what the chart is doing. I do watch for what the news does to the price action, and I adjust accordingly, but still, I don't try to predict anything when news is inbound. I just go with the flow of the market. Maxwell says, do you think we will have an AFP before November? We might, hopefully. We missed the last one with the government shutdown, but we'll see. They pushed CPI through, so maybe we'll get some NFP. They definitely pushed CPI through. Inflation numbers. We soared. We took off. Shout out to Maxwell in the building. Maxwell 7153 in the building. Shout out to Kamal Dorsey. And shout out to Chris Cleveland. Shout out to everybody in the chat. If you're new here, say something. How long have you been trading and what do you trade? Shout out to everybody in the chat, man. We are sitting here waiting for Mr. Powell. Romy Rome. Jerome Rome. Nvidia market cap 5 trillion. Insanity. Nvidia market cap $5 trillion, man. What? Unbelievable. Remember that report of like their staff, like most of their staff being millionaires? That's insane. At the rate they're going, man, they're going to have some billionaires on that staff. Other than Jensen. Because Nvidia just keeps going up and up and up and up. I remember when we were in the 90s and the 80s, everybody was like, oh, it's going to flush. Look at us now, man. Grab you some leaps for a year or two out and let it run. Nvidia is going to figure itself out. Shout out to Maxwell in the building. Shout out to all the new subscribers. Appreciate you guys, man. Let's keep on going. Let's keep on going. Yeah, hopefully we get NFP. We'll see. We are charging at this trend line right here. We'll see if we pop it and hold. We will start to see, Maxwell says, we will start to see individuals with $1 trillion net worth within the next 5 years. That's a fact. AI is out of here. Tesla is leading that wave, man. Like, they want... Elon's about to be a trillionaire, man. That would be crazy. That would be crazy. Shout out to Tech. What's going on, man? Tech says fully recovered from the Bulls' horns last night. Not really. Man, the Bears actually tried to push down, man. I was trying to ride north with the Bulls, but we could not get through. What level was that? it was some level we were just struggling to get through, but we eventually got through it. What was the trend line? Was this it? Yeah, this was like at midnight, right? Yeah. This whole little section right here, I was looking for this move, but I was fighting it in this little chop right here. So we had to pull back from 250 back down to like 225, and then it was just trying to figure itself out. Then we got there, then we tried to play the pop, and I think it looks like as soon as I got offline, we got the push. But it was a slow push, but nonetheless it was a push. But all this, I kind of fought it to the upside. I was trying to push to the upside. I think once or twice I went short, and then I was like, okay, let me just go with the bulls. And whenever we got up here, we just could not pop it. It looks like it wanted to pull all the way back close to 200 before it took off. But it is what it is, part of the game. Asia session can be a headache sometimes. Shout out to Tech. Yo, Tech, any trades today? Shout out to Tech. This trend line looks like it's still holding strong. Look at that. Still wants to hold strong. There's a 15 minute candles. Do they spin it right here? We'll see. Looks like they want to, but we'll see. Tech had plenty of trades. Shout out to Tech. Tech or death. All right, let's see if they curl this thing back up. Shout out to the Red Candles Nation. Shout out to everybody in the chat. They're kind of retreating from the trend line. Let's see how they want to play it. Do they push us back to 200? We'll see. Patience. Shout out to everybody in the chat. Shout out to all the new subscribers. We are in the building, man. We're almost to 1K. We're almost there. We'll see if we can get it like this week into next week. They're pushing us back, but there are a bunch of gaps down here in the 230 to 240 range. Tech says I'm holding longs on NQ right now. Want to see the push out of this range. Yeah, I'm watching to see if we can get another retest of 300. Powell might be the one to do it. We'll see. Powell will be on the mic in 1 hour and 10 minutes, guys. Just a heads up. For anybody that's been under a rock, we got FOMC today. Coming in hot. Rate decision coming in hot. Microsoft coming in hot. Google coming in hot. Zuckerberg coming in hot. Earnings season is here, ladies and gentlemen. Shout out to Tech. Shout out to Maxwell. Shout out to K the New, aka Kamal Dorsey. Shout out to Vibes. Shout out to all you guys, man. Shout out to the YouTube universe. Shout out to Chris Cleveland in the building. If you haven't already and you are enjoying the stream, hit that like button. Like, comment, subscribe, share, hit the notification bell so you know exactly when I go live. Hope you guys are doing well. If you are new here, say something. How long have you been trading and what do you trade? Shout out to Tech. Tech says most of the stocks in the S&P 500 have gone to the open, which is why I'm holding longs, which just need the power volatility. Yep. Oh, you're gonna get some power volatility. It's coming. As soon as power walks in the room, there's volatility. But yeah, most plays are pushing to the upside, man. Great push. All right, we're pulling back. Let's see if we pull back to the 50% retracement of this push. We'll see what happens. If they want to keep going. Where's my watch? Shout out to everybody in the chat. Man, we got Powell coming in hot. Romy Rome is coming in hot. Nvidia market cap 5 trillion. Unbelievable. We got some votes in the poll. 67% of you guys say pullback. 33% of you guys say continuation. We'll see. Are the rate cuts already baked in? Will they pull the rug? We'll see. Man, so Nvidia, $5 trillion market cap, man. That's insane. Man, that's going to be interesting, man. Oh, they're pulling. Let's see if we get another retest of two. Look at that trend line reject, man. Clean. Jeez. If I was a bear, that would have definitely been an entry. That should have been an exit too, man. If I think about it. Whenever we get to a key level like that, and I'm in the green, I'm pulling my stop up. But I just have one micro in there, so I'm just letting it bounce around. But yeah, whenever we get to a key level that could act as resistance or that has been acting as resistance, it's best to like trim your position or just get out altogether if we don't get through the level convincingly. Yeah, I have to go back and look. Let's see. Tomorrow we have Apple and Amazon earnings. Woo, somebody in the Discord just posted Apple to report fourth quarter earnings after market cap touches 4 trillion. Dang, Nvidia's at 4 trillion. No, Nvidia's at 5 trillion. Apple's at 4 trillion. That's crazy. What's that website? Marketcap.com or something like that? I'm not gonna look that up just to see what the big numbers are looking like. Marketcap.com, I think. Shout out to everybody in the chat. If you're on the short stream, come over to the horizontal stream. On the horizontal stream, you can zoom in, change the quality, and see things clear, and change the quality. Yeah, 1080p. Hope everyone's doing well. Wow, big pullback. That trend line did its thing. Jeez. Pullback action. $63. Let's see. Shout out to Tech in the building. Shout out to Chris Cleveland. Looks like they want to test 200 again. We'll see if the bulls can hold on to those levels. Powell will officially be on the mic in 1 hour. It's going down. It's going down. It is going down. Let's see. Maybe I can do write it down, man. If you fail to plan, you plan to fail. 350. Oh, I wonder. Hold on. I gotta look that up, right? Yeah. Technically, hold on. Today is, yeah. Shout out to everybody in the chat. Bulls definitely pressed down from that trend line. Jeez. That was abrupt. We'll see if the 200 levels can hold. There's a 1 hour FEG down there at 200, so we'll see. We do. We do have it, I think. Did anybody look it up? We do have it. I think I just looked at one. All right, we'll see. Shout out to everybody in the chat. One Eye, what's going on? Good morning, good afternoon, good evening. What's going on, One Eye? Power will be on the mic in less than an hour. Shout out to all the new subscribers. Chris Cleveland. One Eye says, hello, how are you doing? Hope all is well. And green for the day. Absolutely. Shout out to One Eye. Same to you. Shout out to Chris Cleveland. Green is green, Chris. Green is green. Even if you leave something on the table, it's all good, man. Green is green. Shout out to everybody in the chat. Shout out to all the new subscribers. Appreciate you guys, man. We are ramping up to 1K, guys. We're almost there. If you're on the short stream, come over to the horizontal stream. There's 2 streams going on right now. On the horizontal stream, you'll be able to see better, zoom in, better quality. You can change the quality too. I think on the shorts, you can't change the quality. But on the horizontal stream, you can change the quality to 1080p. That way you'll be able to see everything clear. Okay, we are rebounding in that 15 minute FEG around, where is that? The 20s levels, 220 levels. We'll see if they go back up there and retest that trend line. We got less than an hour for Mr. Powell. Romy Rome will be on the mic soon. People are waiting on Powell. Let's see. Whoa, where did that go? Hold on. Home runs. Did I not? Oh. Okay. Let me see. Nice bounce back up. Shout out to everybody in the chat. Nice bounce back up. We dropped down to the 220s. Now we're headed back to the trend line. Let's see what happens here. Can the bulls push through? They might wait until Powell might shoot us up and then pull the rug. Who knows? I just know something's gonna happen. Shout out to Maxwell. Rome in the house. Yes, sir. I said Jerome in the house. Watch your mouth. Romy Rome is in the building, ladies and gentlemen. He is coming in hot. 45 minutes. It's going down. Shout out to Maxwell. I said Jerome in the house. Watch your mouth. Yeah, this should be fun. So you're gonna have we got FOMC coming in hot. That's gonna be like an hour long. We'll see how long he stays on. 2:30 to like 3. Then you got power hour. Then you have earnings right after that. Shout out to everybody in the chat. Hope you guys are doing well, man. Happy Wednesday, man. We're halfway through the week, man. We are halfway through the week. Nice bounce. Just like we had an aggressive reject, we're having an aggressive bounce back up. Look at the 2 15-minute candles. Insane. So we'll see. We might get on again tonight. Everybody wants me to get on during Asia session, but I do not like trading Asia session. Man. the moves I'm looking for, it just doesn't do what I want it to. Here and there we'll get some good moves, but yeah. Shout out to everybody in the chat. Shout out to Maxwell. Shout out to Chris Cleveland. Shout out to One Eye. Shout out to everybody in the chat. Shout out to Tech. Shout out to Maxwell again. Shout out to Chris Cleveland. Shout out to Kamal Dorsey. Shout out to Devin. Shout out to Dev Trades. Shout out to Mr. Sam. Mr. Sam. Shout out to Kamal Dorsey, K the Noob. Most people in the poll say we're going to pull back. The rate cuts may have been baked in because the way we've been ripping, man, you would have thought they announced this last week before CPI. But yeah, we'll see what happens. Shout out to Mr. Sam. There goes Mr. Sam, man. What's going on? Maxwell is counting down. FOMC minutes. FOMC is about to go down, ladies and gentlemen. We'll see how things move at 2 p.m. Eastern. We should get an initial movement. Shout out to Mr. Sam. Mr. Sam, you said the other day it was soccer time for soccer. Do you play or are you just watching it? Shout out to Mr. Sam. Wow, look at this thing. Yeah, it's perfect, man. Golly. Oh, man. Yeah, this thing is perfect. And it's like the silver. Perfecto, my friend. Wow. Ooh. Dang, what was that? A dent? Oh, no. I mean, it's all good. Well, no, it's not. Shout out to Mr. Sam. No, watching English Premier. Okay. Too old to play now. I'm 54. All good, man. What did you play when you were younger? 54 is not too old, man. You can get out there. I know a couple guys out there have like a league, man. Everyone's around that age. Shout out to Mr. Sam. I used to play, man. I played striker. I need to get back out there, man. Get the cardio going. All right, guys, it's coming in hot. Yeah, when I was younger, up to my university. Nice. Shout out to Mr. Sam, man. What position did you play? Shout out to Mr. Sam in the building. Yo, the countdown continues. Maxwell is counting it down. This thing's about to go crazy. Do we get to 300 or do we pull back to 200? This is classic, right? We're like right in the middle of the range, right at 50. We could go 50 to the north side. We could go 50 to the south side. 2, 4, 6, nice. Shout out to Mr. Sam. Muno Mars is in the building. What's good, dog? My man. Muno Mars is in the building. Shout out to everybody in the chat. We're going to see what happens here. Things are about to get interesting. Bet, yeah, I saw your message. Yeah, hit me, dog. Shout out to Muno Mars in the building. Shout out to Mr. Sam. Oh. It's about that time, ladies and gentlemen. Here we go, guys. Volatility coming in hot. 20 seconds. I don't know where this thing's gonna go. We'll see if it goes to the, look at how this thing is loading up, man. Insanity. 5 seconds. 5, 4, 3, 2, 1. Ooh wee. We are all over the place right now, guys. Do we get the next leg up? Dang, this thing is all over the place. 50 to 60, 50 to 70, 70. Do we break through this trend line? Ooh, we just cracked through. 300 retest coming in hot. Do we get continuation? Jeez. Insane. Kamalia, this is a combine. I'm just playing around with the combine. I blew one earlier, but I kind of brought this one back. I got 2 XFAs on the side that are just sitting on ice. I'm waiting to get like 3 or 4. And then I'll just activate all of them at the same time, so I can spread my chances out. We got to get the payout ASAP. Nice push. Powell is moving. Shout out to Moon and Mars in the building. Shout out to Kamal Dorsey, K the Noob. Oh man, they trying to flip this thing. What does FOMC say? Let's see. Let me go see what they dropped. Powell will be on the mic in 30 minutes. It's going down. It's going down. We did get up into the 90s. We didn't sweep 300 though. We got close. All right, let me go see what people are saying. FOMC. The Federal Reserve. October FOMC decision. The Fed rate cuts as expected by the Fed cuts rates as expected by 25 basis points. There were 2 dissents, no cut, 1 and 50 basis points. The Fed will and redemption will be invested into the T-bill after that. Statement changes mostly marked to market the outlook, notwithstanding available data instead of recent data. Interesting. So yeah, they're cutting. They're cutting by 25 basis points. Another cut. But it feels like this thing has been baked in for sure. Back and forth action right now. 70-point range on this candle. We'll see where they want to take us. If you look at the daily chart, that thing has room to pull back. But we'll see. It feels like the cut has already been baked in though. The way we've been ripping, man, insane. Let's see. Wild action, man. He'll be on the mic 25 minutes, man. Bears are pressing. We broke the trend line, but definitely didn't hold. They are working down. Yeah, they're tanking it. This trend line has been a headache since the London session. It's 29th, right? Bop, bop, bop. We just challenged it again. Whoever's up here is knocking us down. We'll see if 200 can hold. 200 key level. Wild action right now, back and forth. It's going down. Issue 130. Plus the 10. Dang, man. That's it until, wow. So we got Powell's coming in hot. Let's see what happens, man. FOMC is in full effect right now, man. Up and down action right now. We'll see. When did I get on? Like 8? Might do like 5:30. Big wicks in both directions. Boom, boom, boom. Let's see. So these are 40 plus yeah. Or let me see. Back and forth action. Back and forth. Shout out to everybody in the chat. Hope you guys are doing well, man. Whoa. That trend line is going to be something to watch. I might play Powell in the background. We'll see. All right, we can do that. No problem. We can do that. Shout out to everybody in the chat. Hope you guys are doing well, man. Happy Wednesday. We are enjoying the FOMC action right now. Back and forth. Moving around. The Fed cut rates by a quarter point for the second consecutive meeting. Yeah. Ooh, let me see. Let's see. Hold on one second, guys. All right, man. Powell will be on in 10 minutes. Does he send us to the stratosphere? We'll see. Shout out to Dev Trades. What's going on? Of course we're having fun. We're always having fun, man. We're always having fun in these markets, man. Shout out to Dev Trades. Shout out to Apex Clippers. Shout out to K the Noob. Shout out to Lunar Mars. Shout out to everybody in the chat. Powell will be on in 10 minutes. According to the poll, we got 53% that say we're going to pull back. 47% say continuation. That would be crazy, man. If we keep going, if we go for another leg up, that would be insane. Then after Powell speaks, we got Power Hour. Then you got Meta. Zuckerberg will be reporting. You got Microsoft. You got Alphabet all reporting after the close. Then you got Amazon and Apple tomorrow. And you got GDP tomorrow. And you got PCE on Friday. Insane. It's a lot going on. Shout out to everybody in the chat. If you're new here, say something. How long have you been trading and what do you trade? We are in the building where we are waiting for Romy Rome. I say Jerome in the house. Watch him out. Let's see what Jerome does to the markets, man. We'll see how things react. Shout out to all the new subscribers. Let's keep on going. All right, guys. Let me make that. I think I might have to make a phone call. Let me see. Whoa, I have not seen that. I have not seen that message in months. YouTube is not receiving enough. Don't play with me, YouTube. Don't play with me, YouTube. Let me see. Market capitalization. Isn't there something called coin market cap? Bitcoiner. Bitcoin's at 111K. Yeah, Nvidia 5 trillion, Apple 4 trillion, Microsoft 4 trillion. Dang. I didn't know Apple and Microsoft were up there too, man. But Nvidia got them by a whole trillion. That's crazy. I'm about to post this in the Discord. Saudi Aramco. At least top 10. Even Walmart is up there. That's crazy. Hold on. Largest companies by market cap. Travel? What is that? Aw, boo. Come on. Top 15. Top 15. Here come the Bears. Yeah, Bears are working off of that trend line to the downside. They're not playing. Shout out to everybody in the chat. But we'll see. Powell will be on the mic. I gotta see how I can put like Powell on the how can we do this? Let's see. Oh man, this is the one. Let me see. This is the one. Perfecto. That's a beast. That's 169 though, 35. Sheesh. Price action's all over the place right now. I don't think it has a. This is 20, 23. All right, guys, it's almost time for Powell. All right, let me see how we're gonna do this. Maybe I can play it like in the background. Let's see. All right, man, let's see. Powell's coming in hot. All right, Powell's coming in hot.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although some important federal government data have been delayed due to the shutdown, the public and private sector data that have remained available suggest that the outlook for employment and inflation has not changed much since our meeting in September. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals and in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. We also decided to conclude the reduction of our aggregate securities holdings as of December 1. I will have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a moderate pace. GDP rose at a 1.6% pace in the first half of the year, down from 2.4% last year. Data available prior to the shutdown show that growth in economic activity may be on a somewhat firmer trajectory than expected, primarily reflecting stronger consumer spending. Business investment in equipment and intangibles has continued to expand, while activity in the housing sector remains weak. The shutdown of the federal government will weigh on economic activity while it persists, but these effects should reverse after the shutdown ends. In the labor market, the unemployment rate remained relatively low through August. Job gains have slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Although official employment data for September are delayed, available evidence suggests that both layoffs and hiring remain low.
The bulls are moving.
Households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index suggest that total PCE prices rose 2.8%.
200 held well, very well.
Excluding the volatile food and energy categories, core PCE prices rose 2.8% as well. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or two or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 3.75% to 4%. Higher tariffs are pushing up prices in some categories of goods, resulting in higher overall inflation. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside. A challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. With downside risks to employment having increased in recent months, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. We continue to face two-sided risks. In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it. Policy is not on a preset course. At today's meeting, the committee also decided to conclude the reduction of our aggregate securities holdings as of December.
There goes the rug.
Our long-stated plan has been to stop balance sheet runoff when reserves are somewhat above the level we judge consistent with ample reserve conditions. Signs have clearly emerged that we have reached that standard. In money markets, repo rates have moved up relative to our administered rates, and we have seen more notable pressures on selected dates, along with more use of our standing repo facility. In addition, the effective federal funds rate has begun to move up relative to the rate of interest on reserve balances. These developments are what we expected to see as the size of our balance sheet declined and warrant today's decision to cease runoff. Over the 3.5 years that we've been shrinking our balance sheet, our securities holdings have declined by $2.2 trillion. As a share of nominal GDP,
Insane. Drop zone down from the trend line.
in December,
We are
the
tanking.
next phase of our normalization
26,000 coming in
the
hot.
size of our balance sheet steady for a time, while reserve balances continue to move gradually lower as other non-reserve liabilities, such as currency, keep growing. We will continue to allow agency securities to run off our balance sheet and will reinvest the proceeds from those securities in Treasury bills, furthering progress toward a portfolio consisting primarily of Treasury securities. This reinvestment strategy will also help move the weighted average maturity of our portfolio closer to that of the outstanding stock of Treasury securities, thus furthering the normalization of the composition of our balance sheet. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting our maximum employment, bringing our inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Nick Timmeros of the Wall Street Journal. Chair Powell, are you uncomfortable with how market pricing has assumed a rate cut is a foregone conclusion at your next meeting?
Well, as I just mentioned, a further reduction in the policy rate at the December meeting is not a foregone conclusion, as I've just said. So I would say that needs to be taken on board. We had, I would just say this, 19 participants on the committee. Everyone works very hard at this and takes their obligations to serve the American people very seriously. And at a time when we have tension between our two goals, we have, strong views across the committee. And as I mentioned, there were strongly differing views today. And the takeaway from that is that we haven't made a decision about December. And, we're going to be looking at the data that we have, how that affects the outlook and the balance of risks. And I'll just say that.
You and some of your colleagues have framed last month and maybe today, I won't put words in your mouth, there's a risk management exercise. At what point do you conclude that you've taken out enough insurance? Are you looking for some kind of improvement in the outlook, or could this unfold along the lines of last year, where you made a sequence of adjustments and then waited to gather more information?
So the way we have been thinking, way I've been thinking about it is the risks to the two goals. For a very long time, the risk was clearly of higher inflation. And then that has changed now. And as we saw particularly after the July meeting, we saw the downward revisions in job creation, we saw a very different picture of the labor market, and suggested that there were higher downside risks to the labor market than we had thought. And that suggested that policy, which we had been holding at a I would say modestly, other people would say moderately restrictive level, needed to move more in the direction over time of neutral. If the two goals are sort of equally at risk, then you ought to be at neutral, because one of them's calling for you to hike and one of them's calling for you to cut. So if that got back into balance, then you'd want to be roughly at neutral. So in that sense, it was a risk management. And I would say the same about today, sort of the same logic. But as I mentioned, going forward is a different thing.
I'm Claire Jones, Financial Times. Thank you for taking this question. We've just heard from you that the discussion in December and the conclusion of the discussion is not a foregone conclusion. I'd like to just dig into that a little bit more about what sort of arguments were brought
26K incoming, man.
consideration, for instance,
The way that thing started dropping, I was like, yep,
we're seeing in AI,
they're about to
and
take this
some
thing
of the
down a couple hundred.
also what through rises in stock prices related to the AI boom. Thank you.
You know, I wouldn't say that's a factor in everyone's assessment of the economy. I wouldn't say it's the driving factor. I don't think for anybody. You know, I guess I would say it this way. Once again, I would just point out that we have the situation where the risks are to the upside for inflation and to the downside for employment. We have one tool. It can't do both of those. You can't address both of those at once. You've got a very different situation. So you have some people have different forecasts, right? So they'll forecast faster or slower progress on one or the other, and they also have different levels of risk aversion. And you know, some will be more averse to inflation overruns, and some will be more averse to underruns of employment. And so you put that together, and as you can see from the SEP and from the public discussion that goes on between the meetings when more participants go out and talk, they're very disparate views, and they were reflected in strongly differing views in today's meeting, as I pointed out in my remarks. And that's what leads me to say that, that we haven't made a decision about December. You know, I always say that it's a fact that we don't make decisions in advance. But I'm saying something in addition here, is that it's not to be seen as a foregone conclusion. In fact, far from it.
Can I just ask a quick follow-up on QT? How much of the fund impressions we've seen in money markets are related to the U.S. Treasury issuing more short-term debt?
You know, that could be one of the factors, but the reality is we've seen, the things that we've seen, higher repo rates and federal funds rate moving up. These are the very things that we look for. We actually have a framework for looking at, what the place we're trying to reach. What we said for a long time now is that when we feel like we're a bit above what we consider a level that's ample, that we would freeze the size of the balance sheet. Of course, reserves will continue to decline from that point forward as non-reserve liabilities grow. So this happened, some things have been happening for some time now, showing a gradual tightening in money market conditions. Really in the last, call it 3 weeks or so, you've seen more significant tightening, and I think a clear assessment that we're at that place. The other thing is, the balance sheet is shrinking at a very, very slow pace now. We've reduced it by half twice, and so there's not a lot of benefit to be holding on to get the last few dollars, because again, with the balance sheets, the reserves are going to continue to shrink as non-reserves grow. So there was support on the committee as we thought about it to go ahead with this and announce effective December 1 that we will be freezing the size of the balance sheet, and the December 1 date gives the markets a little bit of time to adapt.
Colby.
Thank you, Colby Smith with the New York Times. So much of the rationale for cutting interest rates, even as inflation moves away from the 2% target, seems to be, that there are these mounting downside risks to the labor market. But if those don't materialize and the labor market either stabilizes around current employment levels or even starts to strengthen somewhat, how would that change your perception of how much interest rates need to fall from here? Would you then be a bit more concerned about underlying inflation and the possibility of second-round effects from tariffs?
Yeah, I mean, in principle, if you were to see data that suggested that the labor market's strengthening or even that it's stabilizing, that would certainly play into our decisions going forward. So, we do have, we get some data. The labor market is a place where we get, for example, we get the state-level data on initial claims, which are sending a sort of a signal of more of the same. We also get job openings, and we'll get lots of survey data. We'll get the Beige Book and things like that. So we'll have a picture of what's going on in the labor market, and the fact that we're not seeing an uptick in claims or a downtick really in openings suggests that you're seeing maybe continued very gradual cooling, but nothing more than that. So that does give you some comfort.
But if this shutdown lasts a while longer and you don't have that data in hand, I'm just wondering how that hinders the committee's ability to assess the state of the labor market and make the right policy decisions, and also how much is that factoring into the debate about December?
Yeah, so we get like I mentioned what we get in the labor area. We get some data in inflation, some data in economic activity. And we'll have a picture of what's going on. We also will have the Beige Book again. I would say
I'll be right back, guys. I'm gonna let them talk. Give me 1 second. I'll be back. Gotta grab some water.
Of things, but I think if there were a significant or material change in the economy one way or another, I think we'd pick that up through this. So in terms of how it might affect December, it's really hard to say. December's the meeting's, I guess, 6 weeks away. We just don't know what we're going to get. If there is a very high level of uncertainty, then that could be an argument in favor of caution about moving, but we'll have to see how it unfolds.
Steve Leisman, CNBC. Mr. Chairman, can you characterize the meeting in terms of, you said strongly differing views. Was this a close call, this cut, or was it a close call maybe the other way because you had dissents on both sides? Thanks.
So I was referring to the discussion about, to the extent it related to December. You saw we had 2 dissents, one for 50 and one for no cut. So, that was a strong, solid vote in favor of this cut. The strongly differing views were really about the future. What does that look like? And I think people are saying, they're noticing stronger economic activity. Forecasters generally, broadly, have raised their economic growth forecasts for this year and next year, in some cases quite materially. In the meantime, we see, a labor market that's kind of, I don't want to say stable, but it's not clearly in motion. It's not clearly declining quickly in any case. It may be just continuing to gradually cool. And again, people have different forecasts and expectations about the economy and different risk tolerances. And so there's you read the SEP, you read the speeches, there are differing views on the committee, and to the point where I said what I said.
And just to follow up on the balance sheet, if you stop it, the runoff now, does that mean you have to go back to actually adding assets sometime next year so that the balance sheet doesn't shrink as a percent of GDP and become a tightening factor?
So you're right. The place we'll be on December 1 is that the size of the balance sheet is frozen. And as mortgage-backed securities mature, we'll reinvest those in Treasury bills, which will foster both a more Treasury balance sheet and also a shorter duration. So that's what. In the meantime, if you freeze the size of the balance sheet, the non-reserve liabilities, currency, for example, they're going to continue to grow organically. And because the size of the balance sheet is frozen, you have further shrinkage in reserves. And reserves is the thing that we're managing that has to be ample. So that'll happen for a time, but not a tremendously long time. We don't know exactly how long. But at a certain point, you'll want to start reserves to start gradually growing to keep up with the size of the banking system and the size of the economy. So we'll be adding reserves at a certain point, and that's the last point. Even then, we'll be we didn't make decisions about this today, but we did talk today about the composition of the balance sheet, and there's a desire that the balance sheet be right now it's got a lot more duration than the outstanding universe of Treasury securities, and we want to move to a place where we're closer to that duration. That'll take some time. We haven't made a decision about the ultimate endpoint, but we all agree that we want to move more in the direction of a balance sheet that more closely reflects the outstanding Treasuries, and that means a shorter duration balance sheet. Now, this is something that's going to take a long time and move very, very gradually. I don't think you'll notice it in market conditions, but that's the direction of things.
Janelle Marte with Bloomberg. How are officials interpreting the latest CPI report? So some components came in lower than expected, but core inflation was still at 3%. So at this moment, what are you learning about the drivers? And also, do you view that the risks are greater that the Fed makes a mistake on employment or inflation?
So the September CPI report, we didn't get PPI after that, which is important for translation into what we look at, which is PCE inflation. But we can still make a pretty good assessment of what that will be. When we get PPI, there might be some adjustments. But so directionally, it was a little softer than expected, and we always break it down into the three components. So basically, you've seen goods prices increasing, and that's really due to tariffs. And that's compared to a longer run trend of very, very mild deflation in goods. So that's moving inflation up. On the other side of that, good news, that housing services inflation has been coming down and is expected to continue to come down. So if you remember a couple of years ago, that's the one that we kept expecting it to do that. Now it's been doing that for some time, and we expect to continue that. That leaves the biggest category is services other than housing services. And that's kind of been moving sideways over the last few months, but a significant part of that is non-market services, and we don't take a lot of signal about the tightness of the economy from that. So if you add all that up, a couple things to say. One is that inflation away from tariffs is actually not so far from our 2% goal. We estimate, people have different estimates of what that is, but it might be 5 or 6 tenths, and so that if it's 2.8, then core PCE not including tariffs might be 2.3 or 2.4 in that range, something like that. So that's not so far from your goal. So that we look at that, and the thing about tariff inflation is the base case is that it will come, and it probably will increase further. But it is that it will be a one-time increase. And, we've been very focused for all of this year at making sure that that's the case and thinking carefully about what are the pathways through which it could become something else, troublesome inflation. One of those would be, a really tight labor market. We don't see that. Another could be inflation expectations moving. We don't see that. So I think, we're watching this very carefully. I think it's not the case that we're just assuming that it's going to be a one-time inflation. We understand fully this is a risk we have to monitor and ultimately manage.
With the stubborn in services inflation, what are some of the things that the Fed could do to address that, and especially when we're seeing potentially labor supply challenges?
Sorry, say the first.
The stubborn services inflation that you mentioned.
Services inflation, yeah. Well, again, the part of services inflation that isn't coming down as we would like it to is the non-market part of non-housing services. And overall, that's just something that we expect will come down. The non-market part of it should come down. It largely reflects higher stock prices and financial services that are imputed rather than actually paid is a big part of that. But also just, we think policy is still modestly restrictive in my telling. So that's the kind of thing that should lead to a gradually cooling economy. That's one of the reasons you see a gradually cooling labor market is because, the Fed policy is modestly restrictive. So that should also help get that. I want to say, though, we're absolutely committed to returning inflation to 2%. If you look at longer-term surveys or market pricing, you will see that that that's a credible commitment, and there should be no question that that's where we're going.
Chris.
Great, thank you. Chris Rugaber, Associated Press. So there's a big investment boom in AI infrastructure right now, as you know, and wondering if the existence of such a boom would indicate that rates are not that restrictive after all. And could further rate cuts at this point perhaps fuel an excess level of investment there or market bubbles? How is the Fed thinking about that?
So I don't think that you're right. There are a lot of data centers being built and other investments being made around the country and around the world, and big U.S. companies are just investing a lot of resources in thinking about how AI, which will be based on those data centers, run through those data centers, is going to affect their businesses. So it's a big deal. I don't think that the spending that happens to build data centers all over the country is especially interest sensitive. It's based on longer run assessments that this is an area where there's going to be a lot of investment and that's going to drive higher productivity and that sorts of things. I don't know how those investments will work out, but I don't think they're particularly interest sensitive compared to some of the other sectors.
And then just a quick follow-up. You mentioned that you do have data that you're looking at for inflation and growth in the absence of government data. Could you give us a sense? I think we know a lot about the jobs data that's out there. Can you give us a sense of what you're looking at to track inflation in the absence of government data? Thank you.
So it's a lot of things, and it doesn't replace government data, but you know all of these. I'll just mention some of the many names: Price Stats, Adobe, and others. And for wage inflation, there's ADP data. On spending, you're going to ask about spending at some point. There are lots of other things that we look at, but it's many different sources, and again, including what we get out of the Beige Book, which will be sort of come out mid-cycle as always. And it doesn't replace the government data, but it gives us a picture. Again, I think if something material were happening, if there were material developments, I think we would pick that up. I don't think we'll be able to have the very granular understanding of the economy while this data is not available.
Howard.
Howard Schneider with Reuters. Thank you. I just wanted you to elaborate a little bit on what you said a moment ago about a continued shutdown, making it more difficult to make a move in December, and that may make you more cautious. To the degree you are relying on private data that isn't the gold standard, or that you're relying on your own surveys of the Beige Book, do you worry at some point you're going to have to start making policy by anecdote?
This is a temporary state of affairs, and we're going to do our jobs. We're going to collect every scrap of data we can find, evaluate it, and think carefully about it. And that's our jobs. That's what we're going to do. If you ask me, could it affect the December meeting? I'm not saying it's going to, but yeah, you could imagine that what do you do if you're driving in the fog? You slow down. So that could or could not. I don't know how that's going to play into things. We may get the data may come back, but there's a possibility that it would make sense to be more cautious about moving. I'm not committing to that. I'm just saying it's certainly a possibility that you would say we really can't see, so let's slow down.
As a follow-up, in the debate on this meeting, we saw recently some pretty big layoff announcements coming from Amazon and others. Wondering if that figured into the discussion at all, that you're starting to see this tension between growth and employment starting to be resolved, to the detriment of employment. And secondly, some of the stress is starting to appear in the bottom spur of the K, as they call it, household health premiums that are going to possibly be going up quite substantially, things like that. Has that started to become a factor in your policy discussion?
So those are both things that we're watching very, very, very carefully. To start with the layoffs, you're right. You see a significant number of companies either announcing that they are not going to be doing much hiring or actually doing layoffs, and much of the time they're talking about AI and what it can do. So we're watching that very carefully. and yes, it could absolutely have implications for job creation. We don't really see it in the initial claims data yet. Now, it's not a surprise that we don't. It takes some time for it to get in there, but we're watching that really carefully. But again, don't see it yet in the initial claims data. On the K-shaped economy thing, I would say the same thing or similar thing. We are, if you listen to the earnings calls or the reports of big public consumer-facing companies, many of them are saying that there's a bifurcated economy there, and that consumers at the lower end are struggling and buying less and shifting to lower cost products, but that at the top people are spending at the higher income and wealth, and so much anecdotal data on that, and so we think there's something there.
Edward.
Thank you, Edward Lawrence with Fox Business. So, Mr. Chairman, I want to take another crack at the further reduction of rates is not a foregone conclusion. So in December, you said far from it. So if a cut might not be on the table for December because of lack of data, what does the other concerns then stem from? So if it's not lack of data as the reason December is not a foregone conclusion, what other things could be the concern then?
Well, the perspectives of people on the committee that, we've now moved 150 basis points, and that we're down into, you're into that range between 3 and 4, where many estimates of the neutral rate live in that 3 to 4% area. You're there now. You're above the median number for the committee, but I think there are people on the committee who have higher estimates of the neutral rate, and that's you can argue these positions since it can't be directly observed, the neutral rate. So, I think for some part of the committee, it's time to maybe take a step back and see whether there really are downside risks to the labor market, or see whether in fact the growth, that the stronger growth that we're seeing is real. Ordinarily, the labor market is a better indicator of the momentum of the economy than the spending data. That's the lore. In this case, that gives a more downbeat read. So people just have, again, we've cut 50 more basis points in the last 2 meetings, and there was a sense like, from some, let's pause here, kind of thing, and a sense from others wanting to go ahead. But that's why I say differing views, strongly differing views.
Yeah, so on that division, then you're talking about going forward. So what's more important in this division? Is it inflation risks? Is it employment risk? Or is there a deeper philosophy division among the board?
Look, everybody on the committee is deeply committed to doing the right thing to achieve our goals, maximum employment and stable prices. You have differences on how to do that. And as I mentioned, some of that is different forecasts, but a lot of it is also different risk aversions to the different variables, which is common through all Federal Reserves. People just have different risk tolerances, let's say. So that leads you to people with disparate views. You will know that from the speeches you've been listening to from my colleagues. And so we're at a place now where we have in fact cut 2 more times. And we're 150 basis points closer to neutral, wherever that may be, than we were a year ago. And so there's a growing chorus now of feeling like maybe this is where we should at least wait a cycle, something like that. That's what it is. It's just what you think it would be. It's and again, you've seen it in the September Summer of Economic Projections. You've seen this in the public remarks of FOMC participants, and now I'm telling you that's what you can expect that in the minutes. And I'm just telling you that's what happened in the meeting.
Elizabeth.
Thank you so much. Elizabeth Scholzley with ABC News. What is your explanation for why the job market is weakening right now, and what will this rate cut do to improve the job market?
So I think there are 2 things affecting the job market, and one of them is just a dramatic reduction in the supply of new workers. And that's 2 things. That's declining labor force participation, which is a cyclical thing. And then there's declining immigration, which is just a big policy change that actually began in the last administration and it has been accelerated now. So a big part of the whole story is that supply side story. Okay. In addition, labor demand has declined, and you know, so the unemployment rate has gone down, meaning that demand for workers is going down a little more than supply. So that's what's going on, but it is mostly a supply function. It's mostly a function of the change in supply, I think, and many people think. So the question then is, what does the our tool do, which supports demand? And and I would just say, when you're in a situation where job creation, if you adjust for likely overcounting in the way that BLS does its work, is pretty close to zero. So maximum employment doesn't, on a sustainable basis, if you're creating zero jobs, if it's in equilibrium, if it's in balance, it's a pretty, as I said before, a pretty curious balance. So, I thought, and many of my colleagues thought, in fact, you've seen the last two meetings, that it was appropriate for us to react by supporting demand with our rates, and we've done that. We've reduced so that rates are looser. I wouldn't say that they're accommodative right now, but they're meaningfully less tight than they were, and that should help, so that at least the labor market doesn't get worse. So it's a complicated situation, and some people argue that this is supply and we really can't affect it much with our tools, but others argue, as I do, that there is an effect from demand and that we should use our tools to support the labor market when we see this happening.
You also talked about tariffs causing a one-time price increase. Should American household consumers expect that inflation will continue to go up this year because of those tariffs?
So the basic expectation is that there will be some additional increase in inflation because it takes a while for tariffs to work their way through the production chain and finally get to consumers. And we see this now from the tariffs that were put in place now many months ago. We see those effects, but if you put tariffs in effect, and they've been coming into effect consistently in February, March, April, May, and that's all happening. So that'll continue to happen for some time, probably into the spring. These are not big increases, though. These are a tenth or so on inflation. They may be big increases on a particular product that's been tariffed, but overall, these are fairly modest. I think some projections go, we're at 2.8% inflation. You might get 2 or 3 more tenths or 4 more tenths maybe. But then, as all of the tariffs are in, they stop generating inflation. You've had a one-time price increase. As long as you're not, at least this is the theory. This is how we believe and hope that it will work out. Once the last tariff is put on something, at that point, it becomes a higher price level, but it stops going up, if you will. Prices stop going up. They'll just be at that level, and then measured inflation will come back down to non-tariff inflation. As I mentioned, non-tariff inflation is not so far from 2% now. Now, consumers are not interested in that story. Their prices are higher. More than that, the reason they're so unhappy about inflation is the inflation that we had in 2021, 2, and 3. Because you can say that prices aren't going up as much, but that doesn't mean people aren't feeling those higher prices from the inflation we had 2 or 3 years ago. They are, and that's, I think, a large part of why the public, if you sample people, inflation is still very much making people quite unhappy. Even, and it's nice that that prices are not going up as fast as they were, but they're still much higher than they were, and it'll take some time for that effect to wear off. As real incomes rise, it will feel better over time, but that's going to take time.
Michael McKee from Bloomberg Television and Radio. Do you have any concerns that equity markets are or are close to being overvalued at this point?
We don't look at any one asset price and say, hey, that's wrong. It's not our job to do that. We look at the overall financial system, and we ask whether it's stable, whether it could withstand shocks, right? So, banks are well capitalized, while some households are clearly under stress. In the aggregate, households are in good shape financially, relatively manageable levels of debt. At the lower income spectrum, you are seeing rising defaults, particularly around subprime auto, but nonetheless, in the aggregate, pretty good. You don't see too much leverage in the banking system or the financial system. It's a mixed picture, but it's not an overly troubling picture. And again, I'm not, it's not appropriate. We don't set asset prices. Markets do that.
Well, you must be well aware that by lowering interest rates, you're contributing to additional asset price increases. And I wonder how you balance the idea that lowering rates would help the labor market with the reality that it seems more likely to be stimulating increased investment in AI, which is the rationale for thousands of job cuts that have been announced in the last few weeks.
Yeah, I don't think interest rates are an important part of the AI of the data center story. I think people think they're great economics in building these data centers, and they're making a lot of money building them, and they think they have very high present value and all that sort of thing. It's not really about about 25 basis points here or there. We use our tools to support the labor market and to create price stability. That's what we do. That's our two jobs, right? So we're here by lowering rates at the margin, that will support demand, and that will support more hiring, and that's why we do it. Now, no 25 basis point or even 50 basis point hike is going to be a dispositive thing, but ultimately, lower rates will support more demand, and that'll support hiring over time. And of course, we also have to be careful about this, which is what we've been doing, because we know where inflation is, and we know that, I've told you the story. It's a complicated story, but this is the best assessment that we can make. Because there's uncertainty around inflation and the path ahead for inflation, that's why we're going. That's why the pace we're going has been a careful one.
Victoria. Hi, Victoria Guida from Politico. On AI, I'm just wondering, it seems like a lot of the economic growth that we've been seeing is fed by investments in AI. So how worried are you about what a sudden contraction in tech investment would mean for the overall economy? Is there enough strength in other sectors? And specifically, are there any lessons that you take from the 1990s in how you might approach what's happening right now?
Yeah, this is different in the sense that the companies that are so highly valued actually have earnings and stuff like that. So if you go back to the 90s and the dot-com, these were ideas rather than companies, and so there's a clear bubble there. Whereas I won't go into particular names, but they actually have earnings, and it looks like they have business models and profits and that kind of thing. So it's really a different thing.
It's time to ask more of our browser. Hey Copilot, adjust all these recipes for 7 guests and combine them into one cooking schedule. Also, I'm out of milk.
Here's a cooking schedule scaled for 7 guests and also milk-free.
Sources of growth in the economy. Consumer spending also, though, has been, is much bigger than that and has been growing and has defied a lot of, negative forecasts, continuing to do so this year. Consumers are still spending. Now, it may be mostly higher-end consumers or maybe skewed that way. But the consumer is spending, and that's a big, big chunk of what's going on in the economy, substantially bigger than AI. You could point to growth. I mean, actually, growth as opposed to level, but consumer spending is a much bigger part of the economy.
And why do you think that the labor market is slowing so much, even though consumer spending is strong?
Why has it slowed so much? Well, what's happened is that the supply of workers has dropped very, very sharply due to mainly immigration, but also lower labor force participation. So, and that means there's less need for new jobs because there isn't this flow into the pool of labor that where people need jobs because there aren't those people now. So there's not a supply of workers showing up for jobs. In addition, demand has also gone down, and so has labor force participation has declined, which is more of a sign, in this case, of demand as well as trend. So I think you're seeing some softening. The economy's growing at a slower rate than it was, 2.4% last year. We think around 1.6% this year. It could have been a couple of tenths higher if not for the shutdown. And of course, that will reverse. But, you still got the economy growing at a moderate pace.
Andrew.
Hey there, Andrew Ackerman with the with the Washington Post. I wanted to ask if you could elaborate on how you think about policy in the context of the data drought. Does it make you inclined to stick with your plans as set out in September in the absence of the data that might change your mind, or does it make you inclined to proceed with added caution because of uncertainty?
Yeah, well, we'll know when we face that question, if we face that question. It'll probably be argued both ways, right? But I've said a couple times here that, if you really aren't getting information you really don't know, and the economy looks like it's solid and stable and hasn't really changed, there will be an argument. I don't know how persuasive it will be, but there will be an argument that, you slow down when you can't see as far ahead. Others may argue, I'm not sure where this argument will come, but you're perfectly right that you could also argue, well, things haven't really changed, but you might not know that, So I don't know whether we'll face this or not. I hope we don't. I hope by the time of the December meeting we're getting, a better flow of data. But if we're going to have to do our jobs one way or the other.
Okay. I also just wanted to ask a FinReg question. I think several years ago you said the overall amount of capital in the system was about right. As the Fed moves forward with a revised Basel proposal, potentially changes to the GSIB surcharge, has that changed at all? Or are you planning to significantly reduce the amount of capital in the system? Thanks.
So there are discussions going on, I think, among the agencies, and I don't want to get ahead of those discussions. I continue to think that the level of capital, when I said that in 2020, was about right. And of course, there's been much capital added since then through various mechanisms. But I look forward to I know those discussions are really just getting going. They haven't come to the point where they're got a whole plan and that kind of thing. So I really don't have much to say on that.
Brian.
Hi, Chairman Powell. Brian Chung with NBC News. Is the weakness in the jobs market accelerating, and who's at risk if the interest rate cuts are not the effective medicine for a further slowdown in the labor market?
So we do not see the weakness, as you put it, the weakness in the job market accelerating. I would say, then again, we didn't get the September employment report, payroll report, but we look at, the unemployment insurance claims, initial claims are reported at the state level, and we still get those, and we can accumulate them and get the national number. And there's really, no story. You can look at the numbers. Same thing with the job openings we get from Indeed. There's just no story over the last 4 weeks. It's kind of stable. So you don't see anything that says that the job market is, or really any part of the economy is making a significant deterioration. Don't see that. You see more things like I mentioned, though, which is you see big companies making announcements of either of layoffs or of the idea that they won't need to hire. Their number of employees is not expected to go up over a number of years. There may be different people working there. They say that too, but they don't need a bigger head count. So you see those kinds of things. You don't see it in the aggregate numbers. The layoff numbers have not gone up, but job creation is very low. And the job finding rate for people who are unemployed is very low. But the unemployment rate is very low as well. 4.3% is a low unemployment rate.
So as you make these cuts, is it the lower income workers that you're thinking about, or those who might have their jobs automated? Is there a particular section of the labor market that you're particularly?
So we can't, our tools don't allow us to target any demographic or any income level, that kind of thing. I do think that people, we saw this during the global financial crisis and the long recovery. If you have a long period of very strong labor market conditions, it benefits people at the lower end the most. The last 2 or 3 years of that long expansion, people at the lower part of the income spectrum were getting the biggest benefits, and lots of things were happening in that space demographically, which were very constructive. And we're not at that place right now. But so, a stronger labor market is the best thing we can do for the public. It's also part of our job. It is half of our job, but it is absolutely the best thing we can do for people. Along with keeping prices stable. Those two things. I mean, inflation also hurts people on fixed incomes more than other people.
Courtney. Hi, Chair Powell. Courtney Brown from Axios. As you know, the 12 Reserve Bank presidents' terms are up for renewal at the end of February. I'm wondering if you can give us a timeline for when the board will consider those reappointments and whether we can expect everyone to be re-upped or if we can expect some changes.
So it's a process that we go through under the law. The way the law works is we have a reappointment process every 5 years for all of the reserve, each of them and all of them. We're in the middle of that process, and we're going to complete it in a timely way. And that's really all I can say.
Okay, thank you.
Daniel.
Daniel Davis, Agence France Presse. You've now had dissents in 3 consecutive FOMC meetings, but in this meeting you had dissents going in both directions, and you've just mentioned there's strong disagreement over the future path of rate cuts. Have these disagreements complicated your role presiding over the FOMC meetings, and if so, how?
I wouldn't say that, no. I think you have to take what comes, and what comes right now is a pretty challenging situation where we have, first of all, we have 4.3% unemployment. We have an economy that's growing close to 2%. So, overall, it's a good picture. It's a good picture. But in terms of our policy, we have upside risks to inflation, downside risks to employment, and this is a very difficult thing for a central bank because, one of those calls for rates to be lower, one calls for rates to be higher. We can't do both, so we have to balance the two. And so it's a challenging thing, and as we have worked our way through this process, you would expect that there would be a range of views across the committee on what to do and the speed with which we should do it. And that's what we have. That makes a lot of sense to me. All of these people are, people who take their jobs very seriously, work very hard at this, and just want to do what's right for the American people, but they have different views on what that is. And, it's an honor to work among people who care that much. It is, but I don't feel that it's unfair or anything like that. It's a time when we're making quite difficult judgments in real time, and I believe we'll get through this, and I think we've done sort of the right thing so far this year. I think it was appropriate for us to be careful about this. I think it would not be appropriate to just ignore or assume away the inflation issue. At the same time, I think the risk of higher, more persistent inflation has declined significantly since April. And if we do wind up resuming rate cuts at some point, we will at some point. I think we're trying to get to the end of this cycle with the labor market in a good place and with inflation, on its way to 2% or at 2%. So that's all we're trying to do, and we're doing it under, quite challenging circumstances and doing the best we can.
We'll go to Jennifer for the last question.
Thank you so much, Chair Powell. Jennifer Schonberger with Yahoo Finance. Both regional and large banks have taken losses on loans given delinquencies on subprime auto loans. JP Morgan CEO Jamie Dimon warned, when you see one cockroach, there may be more likely. I'm curious how the Fed is looking at these loan losses and if it poses risks to the financial system or the outlook for the economy. Is it a warning sign?
So, we're obviously, we watch these things very carefully, credit conditions very carefully. You're right. You've seen rising defaults in subprime credit for some time now, and now you've seen a number of subprime credit, automobile credit institutions having significant losses, and some of those losses are now showing up on the books of banks. We're looking at it carefully. We're paying close attention. I don't see at this point a broader credit issue. It doesn't seem to be something that has very broad application across financial institutions. But we're going to be monitoring this quite carefully and making sure that is the case.
And then separately, many, you yourself have said that we're in a bifurcated economy right now with high net worth individuals continuing to spend with the lower income pulling back. How much of consumer spending continuing hinges on the stock market remaining strong. In some odd way, does the market help keep the economy buoyant?
So there's some relationship there, but remember, the more wealth someone has, the lower an additional dollar of wealth matters. So your marginal propensity to consume declines quite dramatically as you reach levels of stock market wealth. So, the stock market it would affect spending if the stock market went down, but it wouldn't drop sharply unless there were quite a sharp drop in the in the stock market. People at the lower end of income and wealth have a much higher marginal propensity to consume of an incremental dollar of income or wealth, but they don't have the stock market wealth. So I think it's certainly a factor supporting consumption right now. And you would see it if you saw a material correction in spending, but it wouldn't be. You shouldn't think that it'll dollar for dollar stop consumption, because that wouldn't be the case. Thanks very much.
There he is. He's done. What a bounce. We dropped and we popped, guys. There he is. He's done. What a bounce. We dropped and we popped, guys. There he is. He's done. Whoa. My bad. This is insane. Big pop, though. Let me see. Insane. Big pop, though. Yeah, they're rising back up, man. They're back to the trend line. I thought we were going to fall apart even more. I thought 26,000 would get breached. It can still happen, though. We got 30 long minutes. We got 30 long minutes. We'll see. All right, man. Shout out to everybody in the chat. Hope you guys are doing well. All right, man. Powell is done. And we have earnings at the bell. Crazy. Plenty of data coming down the pipeline. Shout out to everybody in the chat, man. Shout out to you if you sat there and listened to Powell. I was sitting here trying to dissect what he was saying. He said everything was good. Getting better. But yeah, they did cut 25 quarter point. 25 basis points. So yeah, we'll see how things close. We got 30 minutes until the close. I wonder who's gonna report right at the bell. Maybe they all report right at the bell. We'll see. Ooh, this might be the flush. 30 minutes left. They could go for the flush. We got back to the trend line though. That's insane. The fact that we got back, that's insane. Shout out to everybody in the chat. Oh yeah, I'm supposed to be. Let me see if I can log in and call these people. Let's see. All right, let's see what happens. We'll see if they spin it around. I have my stop right at the trend line, the upper trend line. I'm watching to see if the bulls go for the finale. let's go for the finale. Powell came in hot, man. Wow. How big was this? We dropped from, because we almost got to 300, right? Call it 83, 283. We dropped like 200 points, 230 points in 5 minutes, 15 minutes. Or no, that was the high of this, 72 to 70, yeah, 200 points in 5 minutes. That was crazy. Shout out to everybody in the chat. Hope you guys are doing well. I'll be back on tonight too, man. Might hop on at like 5:30. We'll just ride it out. Probably 5:30. We'll see. Man. Big volatility. We're in this range right now. We're like in the middle of a big 5-minute gap. Watching to see if the midpoint holds to the downside. We'll see if they curl things down. They might go for the finale. We got MOC at 3:50 Eastern time. So we'll see where we go. Up or down? Looks like they're trying to curl it down. What's up? What is it now? It could be 4 5, maybe. I don't know how much you make it. And then the number one goes in tomorrow. That's not enough. I know about cash. So I'm going to count the cash and see. Because I brought home all the. Okay, so bring it upstairs. If you want, you can get in my room. So we have to do it. See how we can first afford that. And then we have to pull all the taxes. Or middle class, they will have to apply anyway. Okay. Then we have now, you see, because he told me that he's going to mail the taxes to them. Okay? He told me. Yes, I do that. Yes, but I want you to hear it too. Let's say I told you that. Is that correct? Then so
So we don't have to pay anything now, we have to wait. Then until we know we have to wait for that. But I'm gonna pull all that to this subject. But I want, to say that, I hope I take it. Make sure. And, seems like it. So we don't know how much it owes so far, right? That's what it is. Or we have to look on the different center. Have we looked at it, so? It's like, I had a deductible, some money, today, it doesn't say on the, and you haven't done it, so we have to do all that. Now, look on the different center, print all of it, and just put it on the table, everybody can see it. So it's just like, okay. I'm waiting for you.
The tax stuff is, the ones we already owe, I think, are in the law.
I know that.
Oh, yeah. That we can add up.
Yeah, that I know. So how did,
And then also for Edwin, he said one of the years we don't owe.
okay, so let's try to see all that. Let's try to, right? You gonna put it on paper, not mouth. You write it, and everybody will see it. Well. That I know. So how did it? And then also. Look on this, take a set up, and all of it. And just put it on the table, everybody can see it.
Shout out to everybody in the chat. MOC in 6 minutes. Shout out to K the Noob. I think so, man. In my opinion. I think overall, they want to pull this thing back. I think the basis cut was already baked in. That's my opinion. I don't know. But right now, bulls are trying to push back up. We'll see how the day closes, though. MOC is going to tell us a lot. That's in 5 minutes. The last 10 minutes of the hour, it's going to tell us a lot. But then you can't really gauge it because we got Microsoft, we got Google, and we got Meta. So that could take us up. That could also take us down. So it's just a lot of data. You just gotta wait it out, see where you go. Take advantage of a couple of the pivots. Take advantage of the pivots you see, and then other than that, we just gotta wait to see what happens. I think they pull things back, but when that will happen, we don't know. We keep trying to test this upper trend line, but we'll see. Right now we have a trend line to the upside as well, going up from the lows, day lows. So we'll see what happens. Nice pop though, overall. Definitely a nice pop for the bulls overall, for sure. We'll see. It feels like they're trapping bulls right now, but we won't know until MOC. MOC could take us in either direction. We could pop up, we could pop down. But just based on the wicks of the last couple of candles, somebody's pushing down from these levels. I don't know who it is, but they do not want a reclaim. They're fighting over 200 right now. So we'll see what happens. Shout out to K the Noob in the building. Kamal Dorsey in the building. Now, if we break this trend line going up, no telling into the close. Got 4-hour FEG support at like 120s in the 120s. So we'll see. Right now they are definitely trying to push down from this trend line from earlier. We'll see what happens though. Earnings could pop us back up, so we gotta wait for the numbers. It's a waiting game right now. Now, after earnings, what happens overnight? We'll see what happens. Shout out to K the Noob in the building. Shout out to everybody in the chat. I was looking at the daily charts. Are daily candles red? Let me see. Let me double check it again. Daily candles are like flat. So going into tomorrow, it's going to be interesting. And we're fighting VWAP. I just saw that. VWAP is what? Like 35-ish. Like 240-ish. We'll see if the bulls can push back up. They're definitely stronger than I thought they were going to be, though, after that big drop. All right, we got 10 minutes left. MOC is coming in hot. I don't know how they're going to do it. We'll see. Yeah, these bulls, man. When we got down to 26K, I was like, I don't know, guys. But we'll see. If they wick this candle as well, somebody does not want a reclaim of that trend line. One more minute, 30 seconds until MOC. I don't know where this thing's gonna go. We could go 50 up, we could go 50 down. Shout out to everyone in the chat. Appreciate you guys, man. All right, let's see where MOC goes. We got 20 seconds. It could go north, we could go south. Ooh, there it goes. We're north so far. We'll see what happens. Does it hold? We're back to the trend line, guys. Nice push. Dude, they go. This is a heck of a bounce, man. What? Insane bounce, man. Hopefully we get the earnings right at the bell. And then we'll get like a, we can get like a full view. The high of the, what is this, 230? What's the 2 o'clock? 2 o'clock candle is 290. Crazy pop. Woo! Big bounce. Heck of a bounce, man. You gotta give it to him. Off the 26,000 level, whoever grabbed it down here before 100, that thing flew. What's the low? 115, 5 minute 100-point candles. Kent 1444 said full port MOC, let's go. Oh man, shout out to Kamal Dorsey. Nice push though, man. What? I was not expecting the bulls to recover this nicely. Off the 26,000 level. Big pop. Shout out to everybody in the chat. Who is K2021? Shout out to K2021. Shout out to everybody in the chat. What's your handle in your Discord? VWAP Bo. Is that you? K2020? I thought you were in there. K2021. Let me see. Hold on. K2021. That's you? Shout out to Kamal Dorsey in the building. All right, we got 8 more minutes and the day is complete. Okay, gotcha. I'll bump you up. Yeah, nice recovery. Definitely a nice recovery. It's going to be interesting to see what price action looks like into tomorrow. And we have a bunch of, what do we have? Shout out to all the new subscribers, man. Appreciate you guys, man. We're making our way to 1K. Yeah, K the Noob is still in there. All right, cool. So let me. So you're not. Are you using K the Noob anymore, or are you done? You don't use that anymore. Shout out to K the Noob. Oh, nice push. All right, cool. All good. All good. All right, guys, the bell is coming in hot. Shout out to all the new subscribers. Appreciate you guys, man. Shout out to Kate 2021. Kamal Dorsey in the building. 30 seconds until the close. All right, guys. It was fun. We got some Powell. Oh, yeah, we got earnings, right? Dang, I need to see how. Let's see how this thing. Let's see if anything moves. All right, let's see. Here we go. That's the bell. Let's see if we get anything right away. We got Google earnings, Meta earnings, Microsoft earnings. They might not be right away. I'll give it a couple of minutes. Ooh, we're getting a push already. Wow, 300 reclaimed. This is crazy. They are holding the bulls are holding the line. Better than I thought they were going to. We'll see if this is real though. Do we sweep all-time highs and hold? No, do we run all-time highs and hold, or do we sweep and fall apart? That will be the question. What's our high? 320-ish? Ooh, something's happening. We just swept all-time highs. Fresh all-time highs for NQ. Let me see. Who went up? Did anybody go up? I see Google moving. Google is moving. Microsoft looks like it's going to the upside. Let's see. 43. Ooh. Google's moving. Microsoft is moving. They're all like feeding off of each other. Wow. The wait and see effect. Let me see. What a push. Fresh all-time highs for NQ. Wow. What a push off of 26K. Insane. Ooh. They are piercing to the upside. Wow. Yo, Google is to the north side, man. Google is not playing any games. 400 coming in hot? Wow. Google is at 284. This might be all-time highs. I need to go look at the monthly chart. What a push. Yeah, look at that. See? So you got earnings, there's just a lot going on right now. Wow. What a stretch. I see EPS up over year, revenue year, EPS quarter over quarter. Yeah, I see beats. I see beats everywhere. Whoa, did Microsoft just drop to the downside? Oh my gosh, there's a lot going on right now. Microsoft just went south. Hold on. Yeah, Microsoft just went super south. This is crazy. It went south, but let's see if it'll recover. There's no telling, man. This candle is wild. That thing almost stretched to 44, to 40, or 400. Unbelievable candle. Look at that thing. Not a game. Trendline support is in like the low 200s. Old trend line is like at 255. Yo, Kamal Dorsey, just let the group know what you trade and how long you've been trading, just to like reintroduce yourself to the people so they know who you are. Wow, what a push! Microsoft went south and then north. Oh no, no, Microsoft is falling apart right now. Where is Meta? Where is Meta at? Meta's at 47. Meta really hasn't done anything yet. The biggest move is Google. Uh-oh. Uh-oh. Meta's falling apart. Yo, this is insane. This is insane price action right now. Golly. Shout out to everybody in the chat. This is crazy. Yeah, they could pull the plug. Meta is to the downside right now. Google is nice pop for Google. Unbelievable. Sheesh. What a push. Yeah, they're reversing that thing all the way. Wow. It is volatile right now, man. Wow. Microsoft is to the downside. Meta is to the downside. What's Google doing? Is Google following suit? That thing needs to stay up there, man. Stay in at least something. If Google, just keep Google next to 300. Because we need it right now. Meta's to the downside. Microsoft to the downside. Wow. This is some crazy price action, guys. And by the size of that wick, they could go for day lows right here. Oh boy. The wick is like 100 points long. Whenever you see a wick like that and then abrupt price action from that wick, bruh, they could push this to day lows. We're back to 1 hour FEG right here. Can they push through? Sheesh. Trend line is cracking, guys. If they get through this level, look out below, because this is 200 as well. Unbelievable. Meta to the downside. Microsoft to the downside. I have to go look up like what happened. I'm glad we got the prints early. Yeah, they're going for it. 200 breached. Kamal Dorsey, this is what I was talking about. When you got like so much going on, you kind of gotta like play small or leave it alone until the dust settles. Meta miss on EPS, beat on revenue. Wow. Wow. It's a lot of information that the market is trying to process right now. Excuse me. $200 is holding again. 160 held this time. Insane. Last swing low is like 140-ish. Unbelievable, man. Look at this. Wild price action. This is some wild price action. Kind of want to hit it back down. Should I do it? This is a combine. I'm really fresh 5 right here. Do they go for the break? 200 key level, man. It seems like they're holding it. Oh, what time is it? Oh, they kind of canceled it. You can't trade. Dang, I would have had it though. Fresh 5. A lot of gaps in this area. They tried to rise. Now we're headed back to day lows. This is a clean break right here, according to this trend. This is another trend we got. Let's see if they can get through there. 160 key level. We got below that, we got space down. Big drop. I forgot Topstep cut you off at 10. Wild moves, man. Shout out to everybody in the chat. All right, guys, everything has hit. Doshi says, yo, been trading 3 years off and on, and I've been trading, and now I'm starting to trade gold. Started to with Forest, but oh no, you put it in the Discord. My bad. Drop it in the Discord. Just copy paste what you just wrote and put it in the Discord. Shout out to Kamal Dorsey. Yeah, just copy paste what you just typed and put it in the Discord. Shout out to K the Noob. Yeah, just so, because there's like a bunch of new people in the Discord, so they don't know if somebody enters. I kind of let them like introduce themselves, so everybody kind of gets a gist of who everybody is. So the gold people know who the gold people are. The ES people know who the ES people are. The NQ people know who the NQ people are. The options people know who the options people are. So on and so forth. Shout out to everybody in the chat. We had 60% pullback on the poll and 40% continuation. We got a little bit of both. We got a little bit of both off of Powell's remarks. I think we're good. Everything has been dropped. All the earnings have been dropped. Insane, man. What a week. Google is pulling back. Meta to the downside. Microsoft to the downside. Wow. I think Microsoft even beat too. They're just to the downside. We got to go and investigate why they're tanking. They're like 20 points from the close. Meta is 50 points from the close. And Google is like 10 points up from the close. But Meta is 50 points down from the close. Microsoft is 20 points down from the close. Big moves out here, man. Big moves. Shout out to everybody in the chat. I am about to run some errands. You guys have been great. We are back at it. Maybe tonight. We'll see what happens. Oh, man. Tired, bro. But it is what it is. We're going to keep the grind going. All right, guys. You guys be safe. Like, comment, subscribe, share, hit the notification bell so you know exactly when I go live. I should be back on maybe in like a couple hours. We'll see. You guys be safe. Earnings has printed. Google beat. Microsoft beat. Meta missed on EPS, but beat on revenue. All right, guys, I'm going to see you guys soon. Discipline equals freedom, ladies and gentlemen. Singles win the game. The base hits win the game. This is a marathon, not a sprint, ladies and gentlemen. This is a marathon, not a sprint. Take your time, bit by bit. The small bits add up, man. Trust the process. Do not rush the process. Trust the process. Do not rush the process, ladies and gentlemen. Be good to yourselves and be good to others, ladies and gentlemen. Be good to yourselves and be good to others. Shout out to all the new subscribers. We are headed to 1K, ladies and gentlemen. Let's keep on going. You guys be safe. I'll be back on tonight. Peace.